Good morning, MMTs. We've already had a nice conversation before gathering here with the pre-market update on the NASDAQ 100 ratio gaps. And one of the things that we always like to look for, MMTs, in pre-market futures is that OVTI and Decker were both earnings related. The Google gap, so we are day 4. Today's date is 2/25/2011 now, and it's 5:56 a.m. Pacific Standard Time. Pre-market futures, we've already been talking down near an hour about what it's like to be an SMF market maker and what the weekly price action volatility turned out to be, because the bulls and the bears have not had that price action volatility in the market for a number of months, and that the overbought index has finally had a catalyst to pull back, such as the headline events about oil and whatnot, and that the first stages of price volatility work in both ways, meaning that they work in the negative ratios and they also have counter delta ratio gaps. And this morning we have quite a nice little gap list. Just like early on Tuesday when we came back, we had a nice big gap down list. And we had 3 days of price action. Today is price action day 4. And what we're going to be doing is we can see that the list is longer on the gap side today in pre-market. And what happens up there at the elevated teeny gaps is that if the IRs go weak, that means they don't go higher and they start going the other way. And same thing with the bid and ask ratio. Well, then it's time to hit the short execution button, because that means that you drop down and you build weakness. That's one of the definitions of price action momentum that your MMT platform addresses. FFIB is up here on the gap list. Google's making a gap, so we got Priceline running off the back of its earnings. Some of the beaten down stocks, they're coming in and they're buying, just like we said. Price volatility works both down, up pre-market gaps, down gaps in pre-markets. How equities are re-leveraged up in the teeny ranges, okay? It is at the end of the month. People are going to put money to work. It's called portfolio dressing, pump and dump. It will show in the brain that every time the bulls come back, such as they've done between day 1 and 3, off of the bottoms, we were live doing those live trades and why they made their turns and how weak one side of the tape would be, but then walking that dog, the SMF dog, walking that dog off those bottoms in price action, that's where turns happen, and that's where the price action turn happens. That's the really nice thing about walking that dog. Your market maker platform addresses all of it. This is the public excitement level, and it's the psychological pre-market gap, public gap. What will happen up at the top end of the teeny line? If the buyer's not there, the market maker slide the bid, 369, bam. If you wait for it to go down 200 pennies, which would be $2, and then want to short it there, well, you've already given up 2.00 ratio of the short. No. Getting up there when it turns, and as long as it doesn't close above half bars, everyone is okay in price action. Today, we're going to see where the upper end of those deltas is, if the buyer is there or if the seller is there. If the seller is there, then we'll slide the bid. If the buyer still wants to continue and we're already long off the bottom and everything is working, then it would be either a hold before the next breakout, 369, because there'd be another 369 price action breakout bar that would follow. Elevated pullbacks. How do you know that they're viable? It's simple. They pull back 3 teenies and they're elevated in the IR, and you start with that 3 action buy bar. Bam, I'm in. And you get in the teeny, we have teeny expansion in all the names. So that's the NASDAQ gap up list and a little bit of pre-market on the downside. It's very diminished gap. But here they are. First Solar on the earnings. Netflix is slightly a gap down. That Netflix got a lot of short sellers in it, so that's part of the tape. Knowing when them short sellers are going to cover on the names like Netflix and CMG, not to mention there's a few others. Priceline, heavily shorted some of these names. FFIV, starting up with a big gap today. Another heavily shorted name on an intraday basis. I'm talking about the intraday tape that short interest builds and they cover. We get gaps. 117 is a close. There's a $4 gap on FFIV. The bull split. And you're printing at 84.52. TQQ pre-market, we have a split on it, and Mr. Plain has all the ETF split. We got the list. They're going to be put in a Excel format, and then they're going to be issued out to MMTs. So look, not only do you have gaps there, you're going to have gaps on the NYSE as well in the primary session. So gap open up. You can see that Salesforce earnings are piling high. There's the CMG 3.80 ratio gap. That's dollar gap. For us, it's ratio. So here's another one. Wow, BA is up 2.88. So look at some of the names here. NVO, you got Deere, BHP Hilton, VMware. So you're getting some price action gaps. Look at the CLF trade. All of these are good. CMI, Cleveland Cliffs. So look at the length of the gap open price action day number 4 on the NYSE pre-market futures gap ratio on the open. And how we had tested the delta lows yesterday, and that we are in stage 1 of a market correction, which has been long overdue, only for the simple fact that we're very extended. And yes, we can go higher, but this is the first stage. And this is how they work. As I said earlier in the week, you have big gap downs and you can have lots of gap ups. If the gap ups and you're going to tell that the bulls are there, you're going to want to see this list be long like it is right now on the ratio side of the gaps. All right, so there's some good names in here. People are bargain hunting. That FCX is up $1.04. That AGU, that's a dollar ratio gap. So we also got that BHP Hilton. If they do trade, they will pull back. They're not a high beta delta market maker stock. It's more easier, but you know, you would be watching your 5 teenies and whatnot on these things, and 3 teenies. All right, CMG is good. So we got that. Let's take a look at the gap open down. Gap open down. Potash? No. What is that? So let's see. Sort columns. Sorry about that. So there's something going on here with this list. It may not be updating correctly, but it is a gap open down. Nonetheless, it's diminishing. We can see what some of the names are. AstraZeneca's in there. GlaxoSmithKline is in there for some reason. What's going on with that? Is there any news that I'm not aware of? So we can see that some of the big board here is also involved in different sectors here. WTW's down $1.57. Diminishing gap versus gap open on the NYSE pre-market. We already know what it's about. It's all about, that list is very long, from the dollar ratio down to the CRM $12.75 ratio gap. Pre-market. Day 4. Price action. Looking for the strength and weaknesses within the actual price action timetable. The first 20 minutes is where the electronic tape with ECNs and different executions are flaring off there now. And we're going to teach you by using your platform that you can gauge the buyer and the seller and what they're doing. And then, well, the people on the floor that make a market makers and whatnot, get directed to their buyer and a seller all day. Then they make a move and then people follow it. So once again, this is our pre-market and we have the gap list and it's building. So this is part of a bear and bull volatility. Remember one thing, we still remain overbought.